All right, good morning, everybody. I did have some people in Meetup that were supposed to be making it in. I sent the link out, sent both my Discord link and my YouTube link. So if you're not here by now, I don't know what to tell you. It will be recorded. Although, what's a recording for a pre-market really worth after the market's over at the end of the day? So anyway, let's get right into it here. I want to do a quick analysis on the S&P 500, talk about some of the strongest levels that I see coming into the open this morning, as well as some of the signals on the higher time frames. So let's go ahead and zoom out all the way to the weekly here. Again, we're looking at the ES here, the S&P 500 futures market. And I just want to kind of zoom out before we get into the IOTA of this morning and just look at the bigger picture. So we came to the all-time high back in whatever it was, January of February of 2022, January. We sold off, right, and we made this major low in the market back in October of last year. When that happened, we got a huge smattering of quarterly, monthly, and weekly bullish signals from there. And ever since then, the bulls have been attempting here to break out to the upside. However, if you note right here, about 3 times we've come up and basically failed almost to the tick right around the 50% retracement of the whole sell-off from the all-time high down to this low back in October of last year. So we're back up there right now, right? We came up back in December of last year. We fell just a few ticks in front of the 50%, pulled back, and then interestingly enough, the market pulled back and bounced just right at that 61.8 retracement, and then popped back up and retested the 50% retracement, failed again, basically found some demand right in that same area and popped again. And now here we are back at this kind of moment of truth right over in this pocket right here. Are the bulls going to have the strength now to go ahead and break on through to the other side and have this rally back up to all-time highs, or at least come up and test into the 61.8 or up into this 4,600 area? So that's what we're looking at from this broader perspective here. And I said in yesterday's broadcast that we have this previous weekly bar here that looks pretty bullish, right? We had this leg up here from the pullback off of the 50% retrace there. It popped up, okay? The market pulled back here last week and essentially bounced, again, just a few ticks in front of the 38 retrace, which is a great pullback that you would expect a bounce from when you get support from that area from a fib perspective. And then this week here, coming in now where we are, Wednesday of this week, so just a couple days into the week, we did attempt to pop up. And then as of yesterday, or at least the midday on Monday, we had all those bearish clues for a pullback. And sure enough, we did pull back. And if you were in the broadcast yesterday, you also would have heard that this 41.31 quarter level is a 50% retrace of last week's candle. And when we came in yesterday morning, we were up at the top here, I believe. We were just kind of pulling off from this new high we made in this week. And I said that the 50% retrace of last week's candle is a very typical thing to see. So even though we're bullish, from this larger weekly perspective, don't be surprised if yesterday on Tuesday we pull back. And we could pull back into the 50% or maybe even the 61.8 of that previous weekly candle. And then maybe we'll find some support. And then that will be the beginning of that attempt to break out through the 50% retracement of, again, this wall that we keep hitting for basically for probably about 6 months now. The market has had trouble right there, right? So everything's kind of working out as planned here. I just want to give you this kind of zoomed out perspective and also mention, remember I think back in mid-March, we talked about a potential divergence setting up, this of the week that closed on March 17th. And ever since then, we've got the pop back up to that area we've been talking about for a few minutes here. Well, just to let you guys know, from the zoomed out perspective, if the weekly candle continues to stay above, we've essentially broken the high of this previous candle from April 21st. The fact that we pushed higher and the RVI is pushed lower is the first clue that there might be a divergence setting up right here. Now, we won't know until this candle closes at the end of the week and then the next candle opens. So there's a lot of time before we can actually call any type of official signal. But I do want to point out, as we're anticipating these setups, we anticipated this bullish signal for about 3 weeks, and then finally we got the follow through. So I just want to mention, if this continues to look the way it looks now, and this closes on Friday the way this looks right now, we will have a bearish weekly divergence, which means we might end up getting a much deeper pullback here before they come back to rip through the 50%. Now remember, anything's possible here. I'm not trying to prognosticate that there's going to be a pullback. I'm just kind of pointing out that from my trading system, looking at the signal that we have here, if it does follow through, that could be the beginning of the end here for the bulls for another pullback. So I will be monitoring that and seeing what happens here as the week unfolds. Now let's get into our daily. Now I want to point out that yesterday, so this is the candle from yesterday here, this big red candle. When we came into the market in the morning, it was up, trading up over in this area, right? It's up around 41.70 or something like that, if I recall. And we had just rejected off the 50% retrace of that previous daily candle and started to come back down. And what we saw going into yesterday was the candle from the day before, from Monday, had a potential bearish divergence that was showing. We had a 4-hour bearish signal from that high on Monday, and we had a 1-hour bearish signal from the high of Monday up over here. So we had the 1 hour, we had the 4-hour, we had the daily, all pointing for the bears. And then what I told you in the pre-market yesterday was that we basically, there was a good clue that the market could pull back going into yesterday's market. And sure enough, if we zoom in to kind of the iota here, look what happened. Like I said, we came up into, and I think it was the 50%. Yeah, that magenta line you see there was this retracement in yesterday's pre-market, going up and then failing right at 50% of the previous day. And then the market opened here, right over here, and sure enough, like I said, with all those bearish signals from the Monday highs, we expected a pullback, and sure enough, market opened here, there's the 7 a.m. 60-minute candle, and sold off for almost 70 points. So beautiful opportunity there. So let's look at what's going on this morning. We did find a recovery after the big sell-off yesterday, and off of that low, we did get a 4-hour and an hourly bullish signal. That has led to this bounce at the end of yesterday and into the overnight session. The bulls continue to attempt to push here. However, notice where they're having trouble right now. That magenta line right there is 50% of yesterday's sell-off there. So the market came up. First of all, I want to mention that in yesterday's market, the market came up right to the 38% retracement of this whole sell-off. I mean, basically to the tick, and then pulled back. And then in the overnight session, in our Globex session last night, they went ahead and pushed it a little bit further and basically came right to, almost to the tick, right to the 50% retracement of yesterday's price action, which we see happen all the time, and is now having a little bit of trouble. Now they did pull back, and on that pullback we have a 60-minute bearish signal, and on the 4-hour we have the potential here. Remember, it's not going to really show up until this candle closes and everything's official here, but we did actually, I have to revise that. This is from an hour ago when I marked this up. It does look like there's not quite as much of an argument for the 4-hour until this closes. So it's hard to say. We're pushing higher and the RVI is pushing lower here if we were to compare the two. So there's something funky going on, but nothing too strong of a signal right now. But the 1 hour is there. So what does this say right now? It's telling me that there's kind of no strong confluence of signals. Remember, coming into yesterday, we had a strong confluence of bearish signals from the high of Monday, telling me that we could expect a sell-off. And that's exactly what happened. This morning, I don't quite have a huge smattering of signals in one direction. I've got a clear 1 hour bearish signal from the overnight highs here, but my 4 hours not quite showing anything super sexy there from that perspective. There are some divergences going on, but I don't have a nice clear signal like I do on the hourly. And then on my daily chart, there's also no clear signal either way. We're just currently inside of the previous daily signal, which was from Monday. So there's not a huge confluence like yesterday, so I can't confidently say, hey, everything's lining up here, so it would make sense for a specific direction. We're kind of stuck with, no alignment on these higher time frames. So I'm not going to even mention or prognosticate any specific direction this morning because I don't have that confluence of higher time frame signals. So basically, we're going to have to take this morning kind of level by level, and also just see overall what the strength in the market is once it starts to open and we get a clearer picture. So right now, what are we dealing with? Basically, we have two conditions here. The market could continue to bounce back higher. Remember I said with the 4-hour and the hourly signal from yesterday's low, that would be something that is probable. However, I do want to point out the market has already bounced just about 50 points from where that signal originally formed, and 50 points is a pretty good push. So that might be all that this 1-hour, 4-hour signal gives us, right? So let's look at what happens on either side. If the bulls regain some strength here and they don't have some washout off of the 50% retracement of yesterday, then we're looking at a push higher. And what I want to point out here, I try to teach, not only just kind of give you levels and give you what the direction is, I try to show you why and what I'm seeing here on the chart. So what I want to show you is look at this area right here. I went ahead and put it, highlighted it here with this box. But look at last time we were up in this area from about 41.46 to 41.55, 41.56. That little 10-point range, we bounced and bounced and bounced and bounced. There was a whole block there that I actually had highlighted back when we were over there in April. And now look at what happened here. If we just zoom to the right, we've come up now and we're having a lot of trouble getting through that block of price action, right? So just kind of interesting from that perspective. Not only that, but it was the 50% of yesterday, which is a very strong level. And I think that's it as far as building up a case for that little zone there. So let's look at what happens if we can break out through the overnight high right now and get through that pocket. Notice that the top end of this little 10-point pocket that I just talked about happens to be the 50% retracement of the whole sell-off from Monday's high. So if you were to draw your fib from Monday's high all the way down to the low we made yesterday, 50% is right up there around 41.56. Okay, so that is the top end of that little 10-point chop block we were in back, Friday of last week or Thursday of last week or something. That's what we're looking at. There's going to be potential trouble at the top end around 41.56. I like that we have not only the top of that block, but also the 50% retrace sitting right there. So be aware if the bulls do pop through the overnight high, which happens to be 41.49.5 right here, just about. If they can pop through there, don't be surprised if there's trouble right around 41.56. Okay, so that's our first area of contention for the bulls if they do get the strength to go ahead and break out to the upside. Once they get through there, we're coming right up into the 61.8 retrace, which again works over and over again. It's almost like magic, the 41.67.75 level. So if the bulls have enough strength to get through the 50 retrace, we're going to probably find some trouble up at the 61. And there's kind of a pocket right up in here. So if the bulls get through the 61, beware, it gets a little tight in here. I know it's pretty close, but we do have our scaffolding level at 71, 41.71. And then there's a lot of support over here in the market right around 74 to 76. It's kind of a little kind of range right in there. So it is kind of a huge smattering of levels right in that area, but each discrete level is we've seen the market do this kind of stuff. Even though there's levels within 2 or 3 points of each other, I don't know how many times we've seen the market come to the first one, pull back, do whatever it's going to do, come up, just come a few points up to the next one, pull back again, and then even come a few points up to the next one and get a rejection. I've seen it happen, all the time. So don't disregard the fact that you have 3 levels close together. they could discreetly use each one. You never know. So just keep that in mind. This little pocket here, again, 67 being the 61.8, the scaffolding level right around 41.71. And then there's a little pocket here, 75 to 76, is right where we were finding a lot of support in the pre-market yesterday that we eventually just cut right through. So the fact that we bounced here and then we bounced again and then the market opened and we ripped right through it. Remember, don't neglect these areas of support that get a major push through, because when the market comes back, a lot of times that's where we find some resistance there. So that's kind of what we're looking at here to the upside. Again, if the bulls do recover from the pullback off of this magenta line, 50% of yesterday, those are the pockets up above that I would expect to find trouble. Now, if they do break through that pocket up here, again, probably up into 76.5, if they can get through there, we've got the high of yesterday, which everybody who's trading futures should know. The high of the day before, you never know. That could be a resistance point. That could be where we peak through. Maybe we come into it, pull back, and peak through, only to fail back down, fake all the bulls out, right, for a breakout. So be aware of the high of yesterday there at 91.5. And then just above that, we come up into our scaffolding at 95.5 or 95.75, 42.12, and then finally we're going to push all the way up into this major retracement up here at about 42.28.5, and the scaffolding level just a point or two in front of it. So it's basically a little pocket right in here at about 42.26 to 42.29 as a potential resistance point. Again, if the bulls do end up getting up here and breaking out, that is the 50% retrace. We could come into the 50% retrace and fail 3-4 times in a row, guys. It's always possible. So just be aware that's what's up there. And if it's some type of rip your face off rally and we get this breakout through, and I'm not saying that there's a strong chance of that, I'm just saying if. Remember, as traders, we're just reacting to intraday price action. We could have a bias one way or the other, but again, the market has a stochastic way about it, and you never know. Even though everything's pointing one direction, it could totally change, right? So we'll have to see if they do rip out through there. The next level that makes the most sense would be all the way up to 42.64 quarter, and then up into 42.87. So that's the upside there. I don't think we're going to push another 100 points this morning, but if we do, we have those levels up above as potential resistance. Now on the other side of things, if the bears continue to hold the market down, or if the bulls pop and then they fail off one of these areas and start to push lower, we need to be aware of potential support down below. Again, even when the market's heavy, it's going to find some of these areas as support, even if it's for a little 5-point or a 10-point bounce to then turn and come back lower. Yesterday, we had a bunch of fib levels up in here, and the market just violently sold off. Remember, in that 7 to 8 a.m. Pacific time, it was just a heavy sell-off. So that's what happens when the market gets frisky and it gets really, really strong or really, really weak. You could have a bunch of great levels and they just rip right through all of them, right? So that's always a possibility. But let's look down here again for the bearish side of things. If the bears continue to remain in power off this 50% retrace of yesterday and they continue to push lower, there's going to be some contention zones for the bears. First one being the close of yesterday. I don't know how many times the market, expands and gets away from the close from the day before and then retraces all the way back to it only to rotate off of it again. So just be aware that that's the close of yesterday there at 33 quarter. It's also just about a 38 retrace of this overnight leg up. Okay, so be aware that that's sitting there, and then this magenta line that you see dotted across here is that weekly 50% level, 31 quarter, that we breached through yesterday and popped back above. And I talked about this type of scenario, right? So just be aware that that's sitting there. And then from there, we're down to the 50 retrace of the overnight leg up. And that happens to be the 41.27.5. Now, I need to say as a caveat here, if the bears continue to sell off, or if the bulls pop here and we get a new high for the day, this 50% retrace is going to have to shift. you're going to have to redraw the fib from the low of yesterday up to whatever high we get to, and then if it pulls back, you'll have to then reestablish where that 50% level is. But for now, it's, if we don't get a new high here, it's 41.27.5. From there, again, I know it's a little tight and there's a bunch of levels stuck in here, but if we get through the 50% retracement of this pop, we're down into our scaffolding level at 41.23, 41.16, and then we're down to the low of yesterday. If the bears break through the low of yesterday, again, we've got a number of levels down here. We've got 40.97, we've got 40.86.75 and 40.82.75, so a little maybe 5-6 point pocket there, and then we're down into the major retracement at 40.66 and the scaffolding level at 40.54, excuse me. I don't know, that would be just 80, 90, 100 point push down to those areas. If they continue to sell off from there, we've got a major retracement at 22.75, the scaffolding at 19.25, again another little pocket right in there, and then down into 4,007, 39.90, and 39.79.5. That will be another, I don't know what, 160 points lower. We could have some type of rip your face off, sell off, a meltdown. I don't anticipate that getting that low, but at least you'll have the levels that make the most sense for contention for the bears on the way down here. And that basically concludes our pre-market here this morning. I do want to say that unfortunately we don't have a huge smattering of signals in one direction or the other, like we did yesterday when we came in. So that's just the nature of the beast. We're just going to have to take it very conditionally this morning, and again, take it level by level here. So have a great trading morning. I will be on occasionally here to do some pre-markets. It's not going to be an every single morning thing for me. So just stay tuned, subscribe to the YouTube channel, come into the Discord and set your alerts for when I'm going to be on. So you get an alert when I actually do go live. And it is always going to be 30 minutes before the open or 45 minutes before the open. We're not going to, it's not going to be some random time that I come in. It's almost always going to be within a half hour to 45 minutes before the New York Open. So hopefully I'll see you guys around, and hopefully this stuff will help you orient yourself for some trades this morning. So I will see you guys maybe sometime this week or maybe next week. So take care.